And welcome to this episode of Derek Invest. I'm your host, Derek Miller. And wow, this is the third live stream of the day. And the reason I am doing this is because after days like today, there are often a lot of questions. And the first thing I tell everyone is today showed you how well your system functions. What do I mean by that? Well, this is what I mean. When I say today shows you how well your system functions, how did today look for you? Did this catch you completely by surprise? Did it not? Did you know how to handle it when you woke up in the morning? You said, the Nasdaq's down 5.5%, the S&P is down 3.5%. Did you have an action plan? Did you know exactly how you'd handle that? So without jumping onto Twitter or wherever you go to get information, seeking alpha or zero hedge or wherever you go to get information, did you run there and go, oh, what do I do next? Okay. Because if that is what happened to you when you woke up this morning, that is a huge red flag as to what you're doing. All right. Now, I'm bringing this up because I find that most people look for help after they've made a mistake. And then, well, how do I fix it? Okay. Well, there are ways to do that. And I'm going to talk about that in this live stream right now. Is like, what are the best courses of action? Was today everything it appeared to be, and could it be more? Was it maybe not? What type of system do you have in place that makes you aware of situations like this? And then what do you do about it? How do you deal with it? And because there's a lot of people right now that are buried, whether they want to admit it or not, they're buried and they don't know what to do. And you'll see a lot of stuff on like financial Twitter, FinTwit Twitter. You'll see a lot of articles, and the market always goes up. And when you're still hearing that, I hate it when I hear that. First off, it's not true. Second off, most people give back more than they make, even though that's never admitted. There's just the most interesting fact in the world to me was that from 1990 to the year 2000, the S&P 500 averaged 11%. So the index itself averaged 11%. The average person investing in that index averaged 1.2%. You can look that study up. It's everywhere. It's a well-known study. So if that is what the average investor does during markets that effectively didn't have really anything go wrong in them, what do you think happens in markets that are like this one? What do you think happens when this stuff starts playing out, right? You don't have to be a genius to figure this out. Now, I also have the benefit of having been a professional for 25 years. I've looked over probably upwards of 1,000 different lifetimes and what they did with their money and reviewing their portfolio and investments and how they handled this situation and that situation. So I already know that most people mess it up, right? And if that's hard for you to hear, I guess it's hard for you to hear. But it's better to hear that and accept it and then decide you're going to fix it than to hear that, deny it, keep doing what you're doing. And when the market comes back and when things go back to normal, whatever, you say, I told you so, if that's in fact what happens. I'll show you what I see in this market. And what I do this morning wasn't, and for my students this morning, wasn't anything to shake a stick at. It was no, when you wake up to mornings like that, you're always going to have reaction. Like for me, it's just more or less like, wow. So usually what I like to do in the morning, because I do some short-term, pretty high frequency futures trading. Today, I just sit it out. I'm a risk guy. Look, I avoid massive risk. Days like today are massive risk. Now, had I been in that market in futures, and I would never be, right? I don't play overnights, by the way. Other people do. There's times where it makes sense, times when it doesn't. Right now, it just doesn't. There's not enough action. It's too light. So it's just a boxing match, the first 15, 20 minutes of the market opening, which I avoid. I don't even get in there till I'm on the Pacific Coast. I don't get in there till 7 a.m. So half an hour after the market's open, usually I'll start futures trading because I don't care about those first 30 minutes of whack jobs that are gambling and throwing dice. They can throw dice. I don't throw dice. I'm an investor. I make money. That's what I'm paid to do. And so I came on today as a means to help, not lecture. So if you do find yourself in the position where you woke up and you really didn't know what to do, and this was unexpected and shocking to you emotionally, first off, you're not only are you not alone, you're among the 99%, 99.5% of market participants, whether they're professional traders, whether they're professional money managers, whether they are retail. It doesn't matter. You're among the 99.5. I, on the other hand, I learned how to be a professional investor through 08 and 09. Started in 04, learned through 08 and 09. That particular market made me. So now I learned how to be aware of where it can go in the upside, where it can go the downside, running market neutral with, obviously, I will lean into a particular direction that I believe the market's going. And I had to come up with a system that works day in, day out, that is not based on indicators or Fibonacci or moving averages or any of that stuff. Those things work until they don't, then they blow you up. I've watched it a million times, and I've watched it with guys with very big accounts, right? Guys that are in there swinging around 50 million a day. I watch their accounts. I mean, I know guys that have blown up like, I won't get into it. Let me just tell you that stuff doesn't work. Those guys didn't listen because they had a lot of money. And in this world, that, if you have a lot of money, you believe that you're really good at what you do. And no matter what, no matter how much you lose, no matter how much you get back, you're still good at what you did. You just got caught because you're just really not good at what you do. You weren't prepared. And what I'm here to do is help people get prepared. So I want to, if you got caught, it happens. Look, I blew up my first investment account 3 times over a 5-year period. It took me 10 years at probably 60 to 70 hours a week to be what I would call a master in investing, setting up actual portfolios, and then trading short-term, intermediate term, and long-term. There's a lot in there, guys. You're not learning that on YouTube, right? But with people like me guiding you and following people like me, you elevate your chances to have real success. And remember something. Investing isn't just about investments. And this is where I see a lot of information on the internet now, which is great. I love it, right? There's like X market makers, and there's this options guy, and there's these these guys, and they're like, I made this many 100 million. I'm not telling you, they're not telling you the truth. That might be exactly what they did at their desk. That might be exactly what they did. How to set up a human's portfolio, investment risk, investment management, risk management, cash management to run for an actual human that has a set amount of money, so money doesn't just keep piling in year over year. Those are 2 different worlds, right? The key to all, like with the internet, we all know we have all the information. There's no information that is hidden from you. If you think there's some hidden information, I don't know what world you live in. I promise you, there's no shadow this and dark pool that. All information is completely available to everybody. But if you don't know how to sort and structure that information into rules on how you're going to financially plan for your life, and then set an investment plan into place and into practice with all of this information, what good is that information? I mean, if I gave you the keys to how the world works, you're born and raised in the US, you speak English, fluent in English, like you're a linguistics master in English, and I'm gonna say, I have the book right here, and I'm gonna hand it to you. This is the keys to the kingdom. This is how the universe works. Once you read this, you will be God. But it's written in Mandarin. Well, there's all the information that you could ever need. Ever. There's no more information. I'm giving it to you. But it's in Mandarin. Uh-oh. That's what all this information is, folks. All this information you're getting. I love putting out investments. And if you look at my charts, there's no vague, conceptual, this will happen or that could happen or that. So I can always come back and be right. It is dated on the day that I'm telling you which direction it's going to go. It gives you a price target, and it gives you a date for that target. I do that because I know what I'm doing. You have a lot of guys pumping out a lot of information that really is truly useless. Even they don't know when it will work and when it won't work, which is why they're not giving you target dates, target prices. They're not telling you when that was created. They're not telling you what they're at. Even honestly, they're not even telling you how to structure your portfolio. If you're only trading the S&P 500, I don't know what world you live in. I don't know how you're managing risk. So let's talk about today and what it meant. So here's the thing. Start of the day, the NASDAQ is your leading index right now, right? Led by artificial intelligence, followed very closely by semiconductors. That's your leader in the market. So naturally, when you woke up this morning, the NASDAQ was down 5.5%. And the S&P, which is your lagging index, the index that's following, was down less. It was only down 3. Only, right? Here's the close of the day. The NASDAQ closes down 3. The S&P closes down 3. Your leading index recovered nearly 50% of that gap down. That is a strong signal. That signifies strength. Also, the market has been falling. We were already down 10% before the market opened this morning. And then there's a giant gap down 5.5%. Gaps down in a downward trending market, such as this one, are the best way to induce fear into people that don't have a structured, systematic investment plan. Retail investors, trend followers, all get eaten up. But gaps are very positive when you realize that they are doing that. Institutional money, big money. When I say they, I mean institutional money. The institutional footprints on today are monstrous. We did what? Double the volume in both the major indexes. So institutional footprints are everywhere. They're gapping it down, which is a way to institute fear. Because remember something, if you're an institution and you're working at a trading desk and something's trading at 400, do you want it to fall 5.5% down to 380? So the next place you can sell is at 380 instead of 400? No. And you're in control of most of the supply. So you're in a lot of control of the direction that's going to flow as well. That's why gaps fill. And what the gaps fill because those major desks, they don't want to sell at 380. They want to sell at 400. So if they really want to sell, they're going to fill that gap back up to that 400 mark. Then they'll sell. And by the way, they'll trickle it out so they can keep that price as high as possible for as long as possible. So there was definitely, the gap down is definitely an indication that fear is intentionally trying to be propagated on investors and traders, market participants. The fact that the leading index recovered nearly 50% of the gap down today on 100% more volume, average volume than we've been having, is also positive. I would also note for you crypto guys out there that Bitcoin being that crypto market is its own asset class as far as I'm concerned. And that particular asset class is the riskiest asset class in the world at the moment. And that asset class started down 20% and finished down only 9%. So it also recovered half. Another very strong signal. Very strong. Let's talk about something else that was a strong signal. Gold went nowhere. It started the market down and finished down. Your 20-year treasury was up, I think, like 1% at the end of the day. I had been talking treasuries a few weeks ago, picking up that ETF TLT that trades at 91.80. The 20-year treasury was at 91.80. Picking that up, and you can look back for yourself, or I can throw up a chart to coincide with this video. That was being bought at 91.80. That finished up today about 1%. A couple of stocks that we had to the upside, like CrowdStrike and Next Era Energy, I think they both finished positive today. There were positives there today, and then some of my shorts obviously filled and hit home today, so that was nice. But that is how running a balanced portfolio is, having a diversified number of investments. And at the same time, managing the cash and managing the risk within that portfolio as a whole, paying attention to taxation and paying attention to index levels, even if you're trading individual positions. All right. And that protects you. And speaking of which, I'm going to mention that I have a mentorship course starting in 2 weeks. If today caught you off guard, if this was a surprise, if this was shocking, you got to get into that mentorship course. Okay. I'm going to put up my email here. And for those of you on LinkedIn, I'm going to put up my Twitter as well. There we go. Derek Me 752-636-05 is my Twitter. Feel free, jump over there and take a look at my accuracy rate. You will be impressed. What I do transcends what asset you work within, and also what you come away with is something built for you, because I take the time to get to know you. And let me tell you that every investor and trader in the world, this doesn't take the time you're told that it does. I know you're told this is complex, it's complicated, you'll never be able to figure it out. Maybe on your own, you'd have to spend the time I spent, which is the last 25 years. But with someone like me guiding you through the practice, it doesn't take nearly that much time. And then you're getting information from me on a weekly basis that will be more than enough for you to do this on your own. If you know how to answer emails and use the internet, you have the knowledge base and capacity to do this for yourself by spending as little as an hour or two a week. Not getting caught by things like today. All right. I hope that was helpful. Thank you so much for tuning in. I will see you all tomorrow morning. I will do a breakdown of the markets and what I see coming. And if I find something else interesting, I'll do that as well. Remember, it's just not all about investments, everybody. It's just not all about what investment should you buy. It's just not about all this information that, by the way, is everywhere. You have to take that information and you have to systematize it. You have to arrange it and order it into importance and into rules of an investment and financial system built for yourself. And if you do that, I don't care if you want to day trade. I don't care if you're looking to be a swing trader. I don't care if you're only looking to go long term. All right. My mentorship course, I don't care if you're a professional floor trader and now you're doing it for yourself. I don't care what you did for a living. Okay. What I do will help you to sort and organize your information into something that is a more advanced system that brings your risk down as far as humanly possible, while performance, it won't lag. Let's put it that way. It will not lag. Thank you all so much for tuning in. Remember, smile. All right. Even on tough days, they're good days. Get outside, take a walk in the sun. As you can see, I'm outside sweating right now. Fake it till you make it, everybody. You haven't failed yet. I know that because you're here and you're watching. Please reach out to me, dmiller@prometheaninvesting.com. If you're interested in the mentorship course, or for you more serious guys, one-on-one sessions are the most amazing thing you can do for yourself. Really, the size of your current account doesn't mean all that much, right? You don't learn how to, you don't say, hey, I'm going to go surfing tomorrow out at Pipe. And then someone says, well, you know how to surf? Well, no, I don't know how to surf. Do you know how to swim? No, I don't know how to swim. Well, what are you doing? I'll learn when I get out there. I'm just going to goof around, right? I just goof around on a few waves at Pipe. That's not a good idea. And neither is fooling around in the markets and saying that you'll learn as you invest. These are foolish notions that you would never do in any other part of your life, and they are just as serious. Thank you, everybody, so much. Every day above ground to